Hey guys, how's everybody doing? Good morning. Happy Monday morning. Let's check the market while we're waiting for folks to get here. All righty. Let's go over here to TradingView. I was just checking Galaxy's price. Look at this thing up 9%. For some reason, Galaxy won't update live, and it's the only stock in my, or won't update at all in Google Finance. I cannot figure it out. It's the only stock that won't do that, but I have to switch it right. Well, 8.35, that's close enough. I just updated it a while ago. Maybe it'll be back there in a little bit. I was going to switch it, but that'll be close enough. Close enough for government work. It may be back here in a second. There's got to be a way to do this. Maybe I need to scrape this one price from another data source, scrape that from somewhere else. Anyway, all right, well, let's check the market. But that's why I was on Galaxy. But man, that thing's impressive. All right, more impressive than the ES, which is just up 8 basis points, otherwise known as grinding sideways, building out a balance at the 64.15 area. Sub 6,400 has been too low, and so far 6,430 has been too high. We'll see how long that lasts. We shall see how long this lasts. Zoom out a little bit more. It looks like we're making a wedge, kind of higher lows and lower highs. We shall see what happens. Here's NASDAQ. Looks a little bit more bullish, but it also appears to be building out a trading range, a high volume node. Bitcoin's up 0.5 point. It was up a lot more. Wow. What time did that happen? I guess that was after I went to bed. Well, that's nice. 10-year is flat, under control. Let's see what AMD's doing. AMD's doing its AMD stuff, up 1.4. ARC's up 2.2. Oh, Coinbase is coming back. Thank freaking Lord. I mean, this thing, yeah, that thing got hurt last week. GME, no, not really moving. Google. Well, who knows with Google? Let's go over the Crypto Trinity. Let's see what is going on over here. Let's go to the Altiverse. All right, let's move this out of the way. Here we go. How do you take a look at that? Alti is up today, nearly 1%. Average stock in the universe is up 2.2, due in large part to Galaxy being up 8 or 9%. But man, is Bitcoin immersion really up again today that much? You got to be kidding me. Yes, it is. Well, what in the heck? Holy cow. I wonder how SBET is doing. Isn't it Ethereum based also? We'll look at that stuff in a little while. Yeah, SBET's up 11% too. My gosh. All right, well, great time to be to have some Ethereum, I guess. All right, well, back to the Crypto Trinity. Only thing that's hurting us is AAOI. Upstart is pulling back a little bit also. Okay, so that's the Altiverse. Is there anything we want to look at? I guess we can look at the Alti option positions. Let's see if they've done a good job on Bitcoin immersion. They're short the 55s and the 45s and a few 60s. That's probably not going to be enough, though, is it? Who knows? Let's see how well. Nope. They're in the money on all three of those. That's fine. They'll roll those. I mean, it's a first world problem to be mad that your stock went in the money on a covered call. You're actually, like Jay always points out, you've actually maxed out your gain at that point. It's just that people would rather that not happen to them. So because of the opportunity loss, but it's actually a good problem to have. All right. So let's go over here to the LFGY verse. This one has Bitmine immersion as well. Let's see what these guys have done. Now, first of all, the average stock's up more and LFGY is up a little bit more. And I wonder if it's partly because they're partly uncapped on their Bitmine immersion. Let's see what they have. They have it laddered all over the, well, no, they don't here. They just, okay, that was a trade. So, well, that's them selling 50. So, they don't have anything. It doesn't look like they have a spread on, or this was just no, those are the positions. So they have stock plus they're short at the 50. Let's look over here. Stock positions. Makes up 2.72% of their portfolio. But yeah, it looks like they're just short the 50. Why did these guys do a spread on this? Come on, guys. You're short the 50, you think they might be long the 60 or something, which would be working out really well right now. Well, all right. Let's go over here to blocks. All right, let's check out Blox's. We can look at Blox's positions. Now, Blox has Bitmine immersion as well. Now, they sold put spread, so that's a smart thing to do because it still pays an income, but you don't have to settle unless there's a big losing trade, unless the market goes down underneath your puts. So you have theoretically uncapped upside. So that's really good. So let's look at, where's the Bloxy verse? Okay, here's the Bloxy verse. And it's up the most of any of the three of them. And that makes sense because it has the most. It's the most built for a bull market. Alti's the most defensive, and LFGY is in the middle. It's hard to really call Alti defensive. It's probably not. I mean, Alti's definitely not defensive. It just, but it's definitely not something you want to buy if you knew the market is going to drop, you wouldn't want to go out and buy 10,000 shares of Alti. You might want to buy it after the market dropped. But I mean, it's not, I guess if somebody stuck a gun to your head and made you pick one of these three stocks and you thought, or you knew the market was going to drop, Alti might be a good choice. All right. So anyway, let's get out of here. Let's go to the index buffer report and see what's happening over there. Looks like Froggy's here and Marcus is here and three other people. Thank you guys for being here. All right. Index buffer report. Let's go right here. Then we'll go over to the high yield technical analysis. That's really the new buffer report. I don't even know why I do this, just to talk about feed and 5V always being up the most, but sure, true to form, it never fails. That's what lack of concentration does for you, especially lack of concentration in high beta names. And you're going to be up the most or down the most. And then you have SVOL also. Did you guys see that Defiance is coming out with an SVOL competitor? They have 3 VIX focused funds. I'm writing a review on them right now, but one of them is basically SVOL. One of them is an income fund that tries to profit off Contango, which is which is something that futures markets do. We'll talk about it in the video. But anyway, all right, what else is going on? Look at this. LFGY killing it thanks to Bitmine immersion. Alti also killing it, as is SEPI. Does SEPI have Bitmine immersion? We never check out SEPI. I don't have any problem with SEPI. It's just SEPI and FEPI are great. They just use monthly options, or FEPI does. Last time I checked, I've never checked SEPI, but I assume it's the same thing. Nothing wrong with monthly options if you like low yield. You know, this thing yields 25, where the yield max equivalents yield 2 or 3 times as much. But there's nothing wrong with low yield. I mean, and 25 isn't really low yield. Let's see. So they do not have Bitmine immersion, at least not in their top 10. Who is that? McKinney, Virginia. Well, it's none of you guys, because you know I'm on my show unless I'm not sharing my screen or something. Anyway. All right. McKinney, Virginia. I never heard of that one. I've heard of Virginia. I've never heard of McKinney. All right. Probably a telemarketer. Okay, what else do we have going on here? On the bad list is GPTY. Wonder who's pulling back in GPTY's universe. Who is pulling back and causing GPTY to be down? Palantir's up, NVIDIA, C3. Yeah, C3's down, and it's 6% of their portfolio, and it's down 25%. Are you serious? You've got to be joking. Huh. Well, what in the heck? You've got to be kidding me. Let's check out FinViz and maybe does their news. All right, here. C3 plunges as preliminary results. Did they have a Monday morning earnings, or C3 falls 30% on unacceptable results? Wow. Revenue miss. Okay, well, we're going to go to earnings here in a little bit. So let's stick with what we're doing here. So let's finish up on the index buffer report. See anything else that looks interesting? I really don't. GPTY getting murdered. My Lord. It's the safe one, too. It's not really safe. None of these are safe, but they has the less volatile, blue chippier types of stocks. All right. Well, let's look at the yield max buffer. Who cares? I don't really even care about this, but my Lord, look at this AI. So they're catching all the downside. And of course, the yield max strategy is not a downside buffer strategy, because they're adding extra upside. It subtracts from their buffer. So because they're spending money on that extra call to spread it off, it makes them have less yield compared to somebody that just sold a regular covered call, more like Alti, or a covered call that is totally capped, and like Alti, or like lots of other companies. So that's great in an up market, because like I always say, the yield is a tax on the return, on the NAV return, and the total return, but the NAV return particularly in an up market. But the yield is a buffer in a down market. So that is the problem with yield max funds. It's just not a problem. It's just the way they work. They catch more downside than the same fund would be in a covered call fund that was just a totally capped covered call fund. If this was totally capped covered call fund, they'd probably be down 20% instead of 22%. Not a huge difference, but it's just something to be aware of. But the covered call spread, since markets only go up, the covered call spreads on balance have been a good strategy. But you have to sacrifice something. Just there's no free lunch, and that's what you sacrifice. You get a ton of downside. Anyway, all right. Well, but look at this. The other side of this is in these covered call spread funds, it uncaps extra upside. SMCI is almost catching all of SMCY's. Or SMCY is almost catching all of SMCI's upside. Snowy ditto, catching a ton of upside. OR catching more than all the upside. Anyway, all right. So let's go over here to the high yield technical analysis. See what's going on over here. This is the real buffer report. This is a buffer report that goes back a quarter or a year, depending if you like the long term or the short term. I've been thinking once here in another 6 months, when especially they quit coming out with funds, and here in another 6 months when everything's been out about a year, well, just the long term will be the max factor. But for right now, I don't know. I do like the idea of having a shorter term one for trading. But anyway, so let's go to the top 20 list and let's go get a new one. We'll get a new short term and we'll get a new long term. We'll take a gander real quick at those. All right, there is our short term. You can see all these. All right, and then let's go get, what is that for? And then let's maybe pull the long-term list as well. All right. And all right, so let's look at the short-term list. So usual suspects, NVDW, NVDY. Now, the good thing is NVDY is also number one on the long-term list, or at least it was last time I checked. And that would make sense. If it's number two on the short-term list and the number one doesn't have enough data to be on the long-term list, of course it should be number one on the long-term list. Now here we have AMD, which is doing really well in the short term. It's 71% yield. That's great. NAV return for the quarter is 22%. I mean, that's on fire. That's like 100% a year. And then once you add in the dividend, they're on pace to more than double your money. So that's great. Total return for a year is only 17%. So let's go over to the long-term list and see where AMD falls on the long-term list. There may be better choices on the long-term list. NVDY. Well, this is a fail for the list. There's no way it should be that low, though. Gosh damn it. Anyway, let me just run the whole list. We'll look at the dashboard. Not that these other ones aren't great. I mean, it definitely shouldn't be number two because XB whatever, the Bitcoin one, it has a 77% total return over the course of a year. That's really impressive. So right here, it's saying it's a 5.9 on the long-term max factor. Let me just do a little research. It's 5.9 is not enough to get you in the top 20 on the long-term max factor. Well, anyway, on the long-term one, there's better. I would definitely say XBTC's a better choice. Yeah, it's only got 7% NAV return this quarter, but I mean, heck, for the past year, it's 77%. Now, I would dispute XYLD being number three. What in the heck is going on with this list? I'm going to have to look into that. I'm sorry about that. Gosh damn it. I can't do anything right. I mean, there's no way XYLD shouldn't even be on this freaking thing. All right. Well, I'm going to have to dig into the database. There's obviously something going on with that. So ignore that. Ignore XYLD, but MSFY is a definite good one. We'll call MSFY number three. NFLP is definitely a long-term champion. Now, it hasn't done great this quarter, but it had enough total return last year, even when you average everything out, to get on the list. And I mean, that makes sense to me. XYLD doesn't. I'll go look at that. SLVO is a good one. These were higher yesterday. It was second and third, I believe, but maybe silver's pulling back a little bit this morning. QYLG, what in the heck are you doing there? I mean, QYLG, though, I can see it. A long-term basis, it's very unvolatile, and it has 13% total return. And it's relatively safe, and it's doing decent this quarter, too, with the 10% from a non-volatile fund. I could see QYLG, but XYLD just has, anyway, QYLG is halfway uncapped, and that is a good fund with a lot of growth prospects, and or it's not a great fund, but it has some potential. Then we have iGold here doing well, InFly, QILD. Maybe I'm thinking that my adjustment for volatility is gone awry and is playing too big a part. Maybe I need to tone that one down a little bit because anyway, I'll look into that here in a little while. But anyway, there's some other good ones on here. Look at SPY, 11% or 12% yield. 7% NAV return for the quarter, which is respectable, especially when you compare it with the 19% NAV return for the past year. But I still say QILG mathematically is better. It has half the yield, but more NAV return and more total return. More NAV return for the quarter. It's ahead for the quarter and ahead for the year. So I'm fine with QILG being there and SPY being here. That's all good. Anyway, all right. Well, on the short-term list, we'll finish off the short-term list. PLTW, PALT-D, COIW is climbing back up the list. We're back up to 44% NAV return just for the quarter. I think it was in the 30s last week, but it was also in the 70s last week. It's been all over the map. Anyway, you guys can see the rest of them right there. All right. So what else? What else is going on? Hey, SB, how are you doing? All right, let's look at earnings trades. I'm glad I didn't have anything in C3 AI. I got my second consulting customer, client, whatever, last night. I have something set up for Tuesday. I'm excited about that. I should have been doing the consulting / coaching a year ago. All right, let's take a look at this week's earnings. Okay, before the open. Why are they doing them before the open on a Monday? That just, I mean, come on. Come on. No one's even, haven't even had a chance to think about earnings. Plus, it has too long to go in I just don't like the extra 5 days you have to wait. Why is it 4 days? No, there's something on Friday. Okay. All right. So after the close today, we have Oklo, Archer, ASTS. There's some good ones after the close. I'll be on with an earnings show this afternoon. But yeah, there's some good ones after the close. We could probably do something in several of these. Also, ASTS is in several of the funds we follow. All right. Well, that'll work. Then what do we have here? It's just kind of slowing down. We have Circle coming up with earnings. I always get Circle and Galaxy mixed up. But anyway, they're all volatile. And I always get ON messed up. But that's the shoe company. And ON is the computer company. ON is the computer company. ON is the shoe company. So that's before the open tomorrow. I like them after the bell, so I have more time to think about them during the day. Then we have Kava, CoreWeave, Rigetti. There may be some good ones. Cisco might work, or is that too expensive? I'm trying to think. Is that one of the ones that costs $4,000 or something? I may be getting confused with something else. No, that's fine. $70. That's perfect, actually. All right, so we have a little Cisco, and that one's traditionally pretty liquid. Maybe we can do something in there. Rigetti's been hot lately. CoreWeave, Kava, Cisco, and then I don't really see anything other than that. Let's go over here to. I don't really recognize any of those names. For earnings stocks, I like a name brand. I like a Nike or a Walmart or a Cisco, Deere, JD.com, maybe even. All right, so the lineup's really kind of slowing down. Applied Materials could be a good one, though. The ones I'm thinking this week might be good are Rigetti, Cisco, Applied Materials, maybe CoreWeave, maybe Kava. We'll see. I'll do some earnings stuff. At least the earnings spreadsheet won't be this hard to make because there's not as many good ones. So I don't know. I have a friend coming into town today, but I'm thinking 1 or 2 o'clock. Really, how many earnings there? Maybe I could just come on at 2:30, and we can do, if I'm not late, we can just do it then. All we're going to do is maybe Oklo and Plug might work. Big Bear, Oklo Art. There's 4 or 5 there, and then for the morning, Circle. We'll look at Circle too. So even if I go to lunch with my friend, it shouldn't take very long to get that show together. So maybe 2 o'clock or something like that. If you guys are interested in those in earnings, we'll look at. I'm going to look at the liquidity and the stuff I normally do and the call skew, and we'll see if we can find something. All right. So anything else? Hey, Froggy, what were you doing? You're watching a video about setting up option strategies around company earnings. Well, share it in the share it in Discord if you want. Are you in our Discord? Not everyone does Discord. I didn't do Discord for a long time. I was resistant to Discord and trying to think, but Retire on Dividends finally sent me an invitation from his Discord. And he was a bigger influencer. A lot bigger influencer. He had like 5,000 at the time, and I had 500 when I was first starting out. But and I figured I better accept the invitation, and it'd be good for my channel, and it was. It helped my channel a lot. So, but then I was resistant to getting my own Discord for a long time. I said I don't want to deal with all the drama, all the fights and stuff. I'll just lurk on Retires, and I'm also on Kamir's and Todd Aiken. You guys know him. He's a good one. A few others. But anyway, but then I decided to get my own Discord, and it was a great decision. I should have done that a long time ago. Just like I was resistant to doing coaching and consulting for a long time, but I should have done that a lot. Everything I'm doing, I should have done a long time ago. Yeah, Discord is a fun place. There's a million different ways to set up earnings trades. I've probably even seen the video that you're talking about, but and I have my own way of doing it. But if you want good earnings trade information, just watch Tasty Trade. Those guys, Mikey, and I really like the way Mikey and the other guy, Mikey and Tony Bat's son, Nikki Bat, those guys. But Liz and Jenny do earnings content. Those guys are. I get a lot of my information from them. And I don't watch them every day, but I watched them for years and years and years, and they've informed a lot of the stuff I do. Tom and Tony will occasionally do earnings trades. I just don't care for the way Tom trades. He'll just fade anything that's up. If something's up, he'll sell it. He's never met something he didn't want to sell. And if I had a multiple $1 million portfolio, I might do that too, because when you get to the bigger levels, it's hard finding trades. When you have a $20,000 account, you pick out 3 earnings stocks. You do Circle, you're 4 or 5, whatever, and that's fine. And so anyway. Now, speaking of big accounts, SB is in the house. SB set up a few of those flyagonals. Now that's the prime kind of video I like is videos that are showing the more complex option trades. Really, I'm going to start calling those compound option trades. Or compound option strategies. It's the same thing as my risk reversal, my loaded dice, or whatever I call it. It's just a bull put spread plus a long call. And it can even be a bull put spread plus a long call spread. It doesn't have to be just a long call, but it's just the same thing. It's a compound trade. And I'm obsessed with those. In fact, last night I went down a rabbit hole. There's a guy that does these trades called Crazy Calendars. His name is Ryan Jones. He's from Oklahoma. He has a channel. I'll post it in the Discord, but he has some interesting ideas on compound trades. He has a trade he sets up where he's doing a debit spread at the same time he's doing a calendar spread, and he can set it up right where it's like the flygonal. It has a wide range of profit over a wide area, but just by putting two trades together. But yeah, I actually couldn't remember that guy's name, but I went and found it. I'll post it in I'll post it in Discord, but there's some other guys at Power Options that also do a bunch of compound trades. They believe in selling premium, selling calls on a stock plus a married put. In other words, they're doing callers, but they have their whole methodology, and they even have software and stuff. Yeah, anyway, I forgot how much until I watched that Flagnell video and started thinking about it. I forgot how much I love those kinds of situations. Just a compound strategy. Maybe not a compound trade, but it's a compound strategy. It's just, and really in option strategies, all there is debit spreads and credit spreads and calendar spreads. That's all there is. I guess, and then there's long options and short options. But I mean, you can be long an option, short an option. You can have a debit spread, credit spread, calendar spread, and then every trade is just a variation of those things. I mean, you can just break it down to its parts. An iron condor is a compound strategy. It's just a debit call spread with a debit, or a credit call spread with a credit put spread. So that's the OG of compound trades. That's, heck, or compound strategies. Heck, a covered call is a compound strategy because it's long stock plus a short call. It's the best option strategies are compound. It's the covered collar is a compound strategy. It is a covered call plus a put plus a married put. The covered call spread is a compound strategy. It's a covered call plus a long call, or it's long stock plus a credit call spread. Right? Yeah. So anyway, they're all compound strategies, but some are more interesting than others. Yeah, that Flagnell video was great. Well, SB, I'd like to hear how that Flagnell works. Maybe on some of these earnings trades, we'll set up a Flagnell or something. Hey, Dan, how are you doing? Thanks for being here. Maybe on some of the earnings trades, we'll see if a Flagnell works. I'm trying to think what would make a good Flagnell. So a Flagnell is part broken wing butterfly. In my opinion, what makes broken wing butterflies work is a lot of excess call skew. And that's why I was tracking the call skew. And I'll look at the call skew and all these things. So if we find something with like 10 or 20% call skew, that lends itself to the half of the trade, the broken wing butterfly. The other half's just kind of hedging, just kind of extending the area of profit. So we'll set up a Flagnell for earnings or something. That's awesome. Now, what's the deal on the iron condor thing? Did any of you guys try the iron condor thing? I don't remember that video. Anyway, I'm going to go back here through the comments, see if I missed anything. Yeah, darn right, they should redo the S-fall strategy, and they have. Defiance has done it. The people at Simplify, Simplify does have some good stuff, but since Jay is so transparent, he comes on the show all the time and stuff, from now on, I'm going to start looking at one of Jay's. Okay, here's what they did. Let me show you this. Let's go to Defiance's website. See, I already have this open somewhere because I was doing this last night. Let's just go here. Defiance. Maybe it's in another. Is it back over here? No. Yeah, well, okay. Here's the web page. I have it zoomed out. I know it's hard to see, but it's because the back tester, I can't get everything on one page, and I'm trying to take screenshots. I back test a lot all week, and my finger's sore from hitting return. All right. So let's go here to the prospectus is kind of hard to get to. Where is it? Is it right? Not top holdings, distributions. It took me a while. There it is. Okay. Now, what's interesting about, I'm not going to bore you guys with the prospectus and talk about contango and all that kind of stuff. I realize it's not that interesting. Every time I hear that beep, it makes me think I'm not sharing the screen. The first time I hear a text go off, or when I hear it go ding, I look and I make sure it says stop sharing. Because 9 times out of 10, if I get a text when I'm on this, all right, when I'm doing a live stream. All right. So look at this. Defiance vol carry. Vol carry means is an income fund. This one, the strategy is going to be income. Now these other ones right here are tactical for growth only. Anyway, VXXY. I wish they would have come out with this one first. Vol carry just means you know how options have time premium and people sell options to generate time premium. VIX VIX is a futures. Futures have something like time premium. And so anyway, there's different strategies you could use to monetize that. And they call it carry. They call it it has a carry, and it has to do with contango and the shape of the futures curve and all that stuff. Anyway, when you do something like that, you're generating an income just like SVOL does and pays, or like SVOL used to, especially. And it says hedged because it's just like SVOL. It's going to have an out of the money call. It's going to, that's the problem with vol carry is you make just a teeny bit of money. Vol carry is like selling, it's like selling one Delta Iron Condors or something where you make a little bit of money 99% of the time. But then when you lose, it's just glorious and spectacular. It's not really glorious. I'm joking. It's the opposite of glorious. Well, anyway, so that's the problem with vol carry strategies. The hedge won't totally knock that. Their little hedge thing won't knock it out. It'll still be like SVOL. It'll get killed when the market, when volatility explodes. But anyway, that's going to be an income fund. These other ones aren't going to be income funds. So right here, the top one is going to be an SVOL competitor. This one, that's SVI, that's SVIX, and this is UVIX. So, and here's what I was thinking. Here's my conspiracy theory when I was writing this video last night. On the one that's UVIX, that's the enhanced long vol, Jay was selling premium in UVIX, and he was using UVIX in some of his funds. I wonder if they're coming out with this with the hopes that in the future, they might be able to use their own funds for like Alti and stuff. So instead of having to buy somebody else's fund, they can use it's not their fund, but it's Defiance. It's a related fund. I bet you as soon as this has enough liquidity in an options market, I bet you Jay will actually put this one in, when he's trying to hedge something. And on the short vol, I don't really see much need for that. Short vol is the same thing as being long the market. It's just a different mechanism. But I could see them using this VIXI, this Defiance enhanced long vol in lieu of UVIX. And on this other one, VXXY, I think that's just they realize they've probably heard from people that SVOL sucks nowadays. And I guarantee you, I read the prospectus. This VXXY is SVOL. It's how SVOL used to be. Anyway, I'll come out with that video soon. I need to do that today. Get ready for my appointment tomorrow. Hey, Mark, how are you doing? Great episode of. Did you guys watch? What's it called? Trade Brigade this morning. Mark's a big proponent, and I watched it a long time ago, but I keep forgetting to watch it. But I started watching it every morning. I get up with it. The first 20 or 30 minutes is essential, where he has the 4-hour chart. I think he calls that the pathing or whatever. Then he goes into some more esoteric stuff, and that's fine. But if nothing else, that first 30 minutes is solid freaking gold. The rest of it's good too, but that just, it's like, if you're trading or whatever, and you aren't watching him or somebody else like him, or you're doing your own numbers. A lot of people do their own numbers and stuff. That's fine. But you just like driving without a map or whatever, like driving into town you don't know without a map and just driving around. Although I kind of like to do that. I have a good sense of direction. I like just going out and exploring. Hey, well, I wonder where this road goes. This looks cool. I've always liked to do that. But anyway, but yeah, Trade Brigade's essential for anyone that's not watching it. You need to watch it. Oh, we have a store in the house. Hey, Jonathan. I didn't see you, but hello. And yeah, smash that like button. Definitely smash that like button. So Simplify is, very active, but I think they're trying to go after Simplify's business. These guys are aggressive. Not only that, and they also listen to us, and we haven't bitched about that SVOL sucks, but I bet you some people are telling them, hey, SVOL sucks. This is a real opportunity for you guys to get in there and take some market share from them. people give Defiance a tough time and stuff, but what I do like about Defiance, like I mentioned yesterday, Sylvia's background is from direction. I mean, I don't know if she's an option bro or not, but she's a leverage sister for sure. And so I noticed that whenever Jay did that fund TRES, TRES, which was a double diagonal ratio calendar spread, it's just the most exotic thing I've ever seen. It was Sylvia that tried it out. These strategies are more exotic. It's Sylvia again. The lightning spread strategy, isn't that Defiance also? Don't they have a lightning spread product that's coming out that's Defiance? And what about the one that's double short leverage on both sides? Is that one Defiance? Anyway, Defiance is where they bring out some of the more hedge fundy type stuff to me. And Yieldmax is a covered call shop. I mean, nothing wrong with that, but that's another conspiracy theory I have. And I watched the whole thing lots of times, Mark. But this morning I had something going on, but then I watched like the first 45 minutes in that 4-hour pathing. And he shows you all that. I'm a big picture guy. I get that, and and I know all the rest. But no, then I watched a little bit of when he was explaining the advanced decline, all that kind of stuff. There's a name for that. But anyway, and I watched that part too, and how flat they were last week, and we've still been going up. But it really didn't look like there was a lot of new buyers there. If you look at the last week's advanced decline or some of those things. So, and I got that far, and then something came up. So anyway, but yeah, I watched it. I watched the whole thing some days, but today I just watched the first 45 minutes. Anyway, all right. All right. So I'll be back here at 1 or 2. And I'll go run the numbers. I'll do my little spreadsheet thing, and I'll go figure out which one of those. There's only like 5 or 6 of those, so it shouldn't take too long. I'll go figure out which one has the best call skew. Maybe we can set up a diagonal. Maybe we could set up a risk reversal. Imagine that. I'm a one-track mind. I love those things, but it's whatever. We don't always have to do that. Sometimes I'm not sure if just setting up a big broken wing butterfly right in the middle and figuring out which way it's going to go and taking the risk off on that side. Usually the bullish side may not be the best way to go, because you can get paid really handsomely if it doesn't go. I just hate getting beat when I want to be in on the thing whenever something's up 30%. But then on the other side of that is, wonder if I'd done one of those 3-leg plays on C3AI. Now I don't have unlimited loss, but still that would have been a big nasty loss this morning. So anyway, all right, well, I'll go work on this stuff unless you guys have any questions or any comments. So let's see, Dan has a comment. You've been comparing NV2 to other NVIDIA high-income ETFs. Seems to me NV2 is going to do better for you in a taxable account rather than a Roth, because half of it is growth. Yeah, good thing. But then also, doesn't it come down to how much? Well, once we have these funds that have been out a year, I should probably make this part of the max factor. I still can't believe XYLD slipped in that high. I need to go fix that right away. Anyway, I probably should look at what the rock was for last year. Some of these are 100% rock and some are 0% rock. And I think that'd be another way to determine, hey, should this go in my Roth or should this go in my taxable account? And that'd be probably an easy metric to get. Well, no, if it'd be easy to get. But anyway, but yeah, you can also think in terms of, hey, is this thing built for growth or is this thing built for income? And adjust accordingly. Or do I think it's a wash because the rock? Well, I don't know. I'm not an expert on rock. Obviously, I'm not an expert on lots of stuff. All right, NVDY was 40%. Well, the rock sure helps cushion the blow. I mean, these things that don't pay any rock are definitely a tax problem. None of us are trying to make our taxes go up. But if we get Alti, let's just say Alti didn't pay rock. If we get Alti and we're earning all this income, and our taxes are going up, that's the opposite of what we're trying to do. However, the other side of that is when you're working in your 40s and 50s, you should be in the highest tax bracket. And then when you retire from your full-time job, your tax bracket should drop. So maybe you can afford a little income that makes it go back up. But taxes are just such an issue. So I just think every little bit helps on Rock. But anyway, but on the ones that we are concerned about taxable or whatever, the Roth is the perfect vehicle for that. Just, the only problem with that is it's only 7,500, or I think if you're my age, it's 8,500. But if you start that, like I always say, if you start that even at 40, a lot of people, no one saves in their 20s and 30s. I get that. Or a lot of people don't, or you don't have enough money. I mean, nowadays houses are so expensive. You can probably either save or buy a house, but you can't. In other words, you could build up a nice Roth, or you could it'd be hard to do both. Unless you're working as a software engineer for Google, making 300 grand a year or something, like half these people that run around Austin are. But even at 300 grand a year, the old formula was you could afford three times your salary in a house. My dad told me that formula a long time ago. I don't know. That was in the 80s when interest rates were higher. It's probably higher now, but anyway, say it's five times your pay, and say you make 250 in Austin. That's a standard salary. Well, you're still you can find a house, but it may not be the house you want. But anyway, my point is people that are making 50 or 60,000 and live in, a big city, they can either have a Roth or they can have or anyway, it's just tough. Things are expensive. We just had a huge, as you guys know this, we have two classes now. We have upper middle class and then working class. I mean, it's just bifurcated, and there's just nothing in between. And a lot of the upper middle class people, the only reason they can afford stuff is because their parents are boomers, and the boomers are the richest generation in the history of the world, and they've helped them out. But I mean, somebody that doesn't have a rich boomer parent and that's willing to help them out or something, and it's not making 250 or 300 a year and wants to live in Austin. I mean, or wherever, or Brooklyn or Connecticut or Los Angeles or Orange County. It's going to be tough. San Diego, San Francisco, it's going to be tough. But anyway, my point was, if you can do this by the time you're 40, even though it's 7,500 a year, that you can donate that much every year to your Roth and put it in these high yielders, and don't worry about the taxes, and get your dividend snowball going. Do it for 20 years, and 7,500 for 20 years is 150,000 of notional, and hopefully you've grown it. And then when you retire, that's a nice income portfolio for you. My point is, it's not too late. It's never too late to get to max out your Roth, but that's assuming that you have boomer parents, you already have a house, or you have a really darn good job, or I guess the other defense is you have a business. You have a profitable business. But anyway, it's just tough out there. It's tough. I feel bad for my friend. I have friends that make good living, like 100,000 a year, but they don't have boomer parents, and they're not able to afford a house anywhere close to Austin. But Austin does pay good salaries, and so there's a lot of good jobs here. Like my friend that's making 100 grand a year, but he can't live here. I mean, he'd have to live 40, 50 miles away, and it's even getting expensive out there. So anyway, the housing situation's out of control. All right, that's my filibuster for today. All right, guys. Well, there's still 10 of you guys listening. But anyway, I appreciate it. I'm going to get out of here, and I'll get busy on all this other stuff I'm supposed to be working on, and I'll see you guys about 2:00 if nothing goes awry. All right, guys. You guys have a wonderful day, and I will talk to you later.